So you can be able to take your trade at this point, place your stop loss below the strong low with the take profit at this high. It's the same case when it comes to this example. If price gave you a strong high and we got this as the pullback and a continuation to the downside, so you can expect price to come back, take out this high, so you can be able to sell something like this. So you shall take this 3 candlestick formation over here as the liquidity in this case, so you can target its low. And at this point we shall always have there a supply zone for you to sell from. I hope that makes sense, so I can head over to the charts to show you some of the examples. Example 1, I think it was this one, this trade. I also shared it in the public channel. So when you take a look at this trade, price was moving in this format. We had a drop, we got a pullback, price dropped again, and then price took out this previous high, and then price broke structure, price gave us a pullback. I hope you're seeing this. That's why I marked this as a liquidity sweep. Price took out the previous high and broke structure to the downside, meaning that this point now was our strong high. So when price dropped, breaking the previous structure, price pulled back again and then dropped. So I expected price to return, take this high as the liquidity. I had to sell from this strong high, targeting to take price lower, of which the stop loss had to be above this strong high, because it took out liquidity from the previous high and it broke structure to the downside, of which price did what? Took out this high as the liquidity, tapped into the strong high, and it dropped. Another example, it could be, this one over here, this one. So a lot of examples, it happens over and over and over again. When it comes to this, price was moving like this, got another push up, another drop, another push up, then price took out liquidity from the previous low and broke structure to the upside, indicating that this is our strong low. So I just adjusted this stop loss when price broke this previous high. So I set it to break even, but initially the stop loss was below this strong low. So I regarded this as the liquidity in this case. So the execution was here with the stop loss below the strong low. So this pattern, if I take it out, you can see clearly, because I told you price has to take out liquidity, break structure to the upside. I hope you're seeing this. So you can be able to, either you can wait for a pullback and price continues, so you can be able to regard this as the liquidity, and then when price drops again, you buy below the liquidity to continue up. So you can take your trade below the liquidity, put your stop loss below the strong low, and target the previous highs, of which it's what is happening here. Price had given us a strong low because it took out liquidity and broke structure. So when price pulled back and continued, you place here your trades with the stop loss below the strong low. So you target to take price to the upside. The same thing also happens over here, but it was in the lower time frames. I hope you can see this. Price was moving in this format. We had a drop, a pullback, another drop, a pullback, another drop. Then price did this. So when I pull that out, you can see that price took out liquidity from the previous low, and then price broke structure to the upside. So this one was our strong low. That's why I just waited for price to give me this pullback, then continue up. Hold up. Price had to give this pullback and continue up, so I can be able to take this pullback as the liquidity and buy below the liquidity with the stop loss below the strong low, targeting to take price up. This is what happened. Buy below the liquidity with the stop loss below the strong low to take price up. And in this trade, I was targeting this Asian session high because I know that price is always aiming for the liquidity. So at the Asian session highs, we usually have liquidity there. That's why this trade I was targeting the Asian session highs. I hope this makes sense. A lot of examples are there because it happens day in and day out. If you use it very well, it will give you a high win rate. If you're finding it difficult to understand it, I encourage you to watch and rewatch. Also this setup, this one, it's also the same thing over and over again. If you take a look at this point, what did we have? Price gave us this, price dropped, pushed up again, dropped, taking out the previous low, and then shot up. So if I pull out this, you see that price took out the previous low. So price took out liquidity and then price shot up to the upside. So after seeing that, we got this pullback. So I had to consider this pullback as the liquidity, and I buy below the liquidity with a stop loss below the strong low. I hope it makes sense. So it's up to you. You can use it as either a pattern, but it works best if you use some logic. Once you see something like this, price gives you a strong low and pushes up, you're well and good. Wait for this pullback so you can anticipate price to come back, take out that pullback, and continue higher. As simple as that. So you can be able to buy below this pullback because it's now acting as our liquidity. Buy below the pullback place your stop loss below that strong low, target take price up. So if you see, it's what I was doing. This pullback, I marked it as the liquidity, and this is what price did. After taking out the liquidity, I had my stop loss below the strong low, just as indicated over here. This was a strong low. Take a look. Took out liquidity from the previous low and broke structure. So you place your stop loss below the strong low, and you can be able to hold until it flies up. I hope you can see. Simple stuff. Either you can use chrome work, or you can trade it as a pattern, or you can use some logic, because it happens day in and day out, day in and day out. I got a lot of setups on this Euro USD using the same stuff over and over and over and over. This pattern, the moment you spot a stop hunt, break of structure, if you get this pullback, well and good, you can wait for price to take it out and you buy. If you're anticipating for the sales, something like this, a stop hunt, break of structure, if you get this pullback, well and good, price drops, then later on comes back and takes it, you sell. As simple as that. I hope you find this helpful. You can also share the link with any other friend of yours in case you wish them good. In case you don't, well and good. So long as you can be able to use it to improve.